Howdy, folks. Welcome to Liberty Call. Today is Tuesday, November 26, 2024. 2 days to Turkey Day. Well, ham in our case. My wife doesn't like turkey, so I'm not going to fry up a whole turkey just for me because I don't eat that much food. So, I mean, granted, I can put away the food, but at this point in my life, at 50 years old, I probably shouldn't just because I need to stay in shape and not get too fat because it makes my arthritis, my back hurt. So anyways, hope you're having a great day out there. It's kind of a day here. I think we got some snow coming tonight into tomorrow. I think it's supposed to snow all day. Not too much, but just enough to be aggravating. And then because we were originally going to go out to dinner on Thanksgiving, like we do sometimes, to either Ruth's Chris or Perry's Steakhouse. Yes, we have one of those up here in Colorado. Yes. But it looked like it was going to be snowing, up Thursday morning. I was like, I really don't feel like clearing the driveway and clearing the car. So let's just get a honey baked ham and have dinner here like, we do sometimes. So anyways, so those are my Thanksgiving plans. I don't know about yours. You're welcome to call or email me and let me know. But before we get into today's markets, if you could do me a favor, give me some thumbs up, a like, share, subscribe, a follow, and press that notification bell. My main man, Jake, back here is just waiting to go play some ball time. So, all righty, let's get into the numbers. God, every time. Dow Jones was up 0.28%, 123 points, closed at 44,860. S&P 500 up 0.58%, 34 points, closed at 6021. Nasdaq up 0.62%, closed at 117 points, closed at 19,172. The VIX fell 3.36% today. It's at 1411. Canada down 0.02, so flat. Brazil up 0.69 and Mexico down 0.98. Alrighty. Germany was down 0.52%. The UK down 0.4%. France down 0.87%. The Netherlands down 0.48%. Spain was down 0.8%. Italy down 0.78%. Switzerland down 0.41%. And Portugal down 0.36%. So mostly, if not all, red across Western Europe. Russian exchanges both red again today. The MOEX down 2.57%. RTSI down 3.75%. And the Asian markets also mostly red. The Nikkei in Japan was down 0.84%. Australia down 0.69%. New Zealand down 0.18%. In China, the Shanghai was down 0.12%. Shenzhen Component down 0.84%. The China A50 was up 0.25%. DJ Shanghai down 0.25%. Hang Seng up 0.04%. And the Taiwan weighted down 1.17%. All right, so not the happiest day in the markets. All righty, well, let's hop into our market recap. S&P 500, Nasdaq climb. Markets analyze Trump tariff threats and the Fed minutes. Yeah, if you need some help falling asleep, go read the Fed minutes. It is as exciting as IKEA instructions. All righty, the S&P 500 and Nasdaq extended their rally on Tuesday, led by a tech sector rebound as investors navigated President-elect Donald Trump's tariff proposals and the latest Federal Reserve meeting minutes. And if I could stop here, I know there's been a lot of hand-wringing and freaking out about what's happening with the tariffs. However, these are opening salvos to, these competing countries. And, Trump is, notorious for the big ask. Ask for the world, and when all you really wanted was, a remote control. So, it's like, I want a TV, I want a stereo, I want this, I want that, I want Bluetooth, I want a Bose sound system. But all he really wanted was a remote control to turn on his TV. He asked for all those things. So when he only gets maybe a TV, a Roku box, and then a remote, he's like, hey, I came out ahead. So anyways, calm down, people. All right, where were we? The Federal Reserve's November minutes revealed division among officials on the need for further rate cuts and emphasized a cautious approach to future policy guidance. Short-term interest rate futures paired losses after the release, reflecting uncertainty over the Fed's next moves. Trump announced potential 25% tariffs on Canadian and Mexican imports and additional 10% tariffs on Chinese goods, reigniting trade war fears. Now, if the people on the left, and of course, the journalists who write this stuff, who are all leftists, if they were so worried about these tariffs, why didn't they push for President Biden to remove the tariffs almost 4 years ago when he took office? Because these same tariffs that are in place right now, especially the Chinese ones, were put in place by Trump and left in place by the Democrats. So again, I'm not playing sides. I hate both of them. Anyways. Alrighty, where were we? Automakers Ford, let's see here. Automakers Ford, negative 2.2%, and GM, negative 8.3%, were hit hard due to their integrated North American supply chains. Concerns over higher production costs and declining revenues added pressure to trade-sensitive sectors. Well, maybe ask your vendors to start making their stuff here in the United States, and you won't have to deal with that stuff. The tech-heavy Nasdaq saw strong contributions from Microsoft, up 1.3%, and Apple, up 1.4%, as investors shrugged off tariff risks, believing the rhetoric may outpace actual implementation. What did I just say? Market optimism was bolstered by robust economic performance, mitigating short-term fiscal drag from tariffs. Corporate highlights, Wells Fargo gained 1.3% after reports of progress in lifting its $1.95 trillion asset cap following a regulatory overhaul. Amgen dropped 7.6% after its obesity drug trial fell short of expectations, weighing on the Dow. Get it? Weighing because they're fat. You could try eating less, people. That would probably be a better solution than injecting drugs into your body that slow down your motility in your gut and all those problems. Fasting, exercise. Those are the things I do. I mean, granted, I'm not in perfect shape, but, I can still fit in my uniforms from 30 years ago when I was in the military. So next up, Eli Lilly rose 5.1% amid President Biden's proposal to expand Medicare and Medicaid coverage for anti-obesity drugs. Hey, yeah, the 3/4 of America's obese. Let's give them medicine. Best Buy slid 5.7% after cutting its annual profit and sales forecast. The S&P 500 touched record highs for the sixth consecutive session, while the Russell 2000 retreated 0.6%. Declining issues outpaced advancers on the New York Stock Exchange by nearly 2-1, despite a combined 276 new highs across major indices. All right, so that's the news for today. Let's jump into some data. October new home sales comes to us via First Trust. Mr. Bryce Kill wrote this report. New home sales in October dropped by the largest monthly margin since 2013, marking the slowest pace in 2 years. The decline primarily driven by extreme weather from Hurricane Helene and Milton in the south. The largest housing market region appears to be temporary. New home sales are a timely housing market indicator based on contract signings are expected to rebound in the coming months. Despite the temporary weather impact, the housing market faces ongoing challenges. Mortgage rates, after falling ahead of the Federal Reserve's September rate cut announcement, 30-year fixed mortgages have climbed back above 7%, straining affordability. Median prices, while home prices have increased year over year, the median sales price of new homes is down 5% from its peak in 2022. Developers have responded by reducing prices per square foot, down 1.1% year over year, and offering more lower-priced options, contributing to the price deadline. Supply trends. Supply of completed single-family homes has surged by 265% since its low of in 2022, exerting additional downward pressure on new home prices. In contrast, the market for existing homes faces persistent inventory shortage as many homeowners are reluctant to give up their low fixed-rate mortgages. Optimistic outlook. Lower prices and increased inventory are giving buyers more options, setting the stage for a potential rebound in new home sales. Additionally, housing price indices rose in September, with the national Case-Shiller index up 0.3% and the FHFA index up 0.7% for the month, reflecting steady demand. Manufacturing insights. Meanwhile, the manufacturing sector remains weak, with the Richmond Fed Index unchanged at negative 14 in November, underscoring persistent changes in that segment of the economy. The housing market's recovery will hinge on affordability, financing costs, and ongoing economic conditions. All right, so it's kind of mixed. I mean, I personally think home prices are still way too high. I mean, granted, I would lose a ton of equity in my house. However, I mean, I bought my house well before all this craziness started back in 2017. So even if the price came down, I think, right, I just got a thing from, was it Redfin today that, my, estimate of my house is like $850 and I bought it for $490 and I think we only owe like $400 on it now. So there's a nice chunk of equity in there, and but for the greater good, so the prices stabilize and normalize, I'd be willing to, lose a little for the greater good of the economy. All righty. I guess not if you bought last year at market peak. You probably don't want to lose any equity. Last up from our friends over Zero Hedge, FOMC minutes show many members suddenly favor more gradual rate cutting cycle. So let's see what this article had to say. The Federal Reserve's November meeting minutes reflect a notable shift in sentiment, signaling a potential pause in rate cuts as post-election markets rally and economic data sends a mixed signal. Key takeaways: gradual approach to policy. Many Fed officials highlighted uncertainty around the neutral rate of interest, advocating for a more gradual easing of monetary policy. This marks a pivot from earlier consensus favoring aggressive rate cuts. A potential pause. Some participants suggested pausing rate reductions if inflation remains elevated, while others indicated easing could resume if labor markets or economic activity weakened. Balanced risks. Nearly all members agree that the risks to the Fed's dual mandate, price stability, and full employment are now more balanced than before. Wow, that is some amazing insight from these people. And inflation expectations. Chairman Jerome Powell described inflation's path to 2% as bumpy, but reaffirmed confidence that it would that it would show sustainability by 2026. So, hey, only 2 more years. Let's see here. Since the November 7th meeting, markets have rallied across bonds, equities, and the dollar, while commodities like crude oil and gold have weakened. Rate cut expectations have cooled, with fewer than 3 rate cuts priced in by the end of 2025. However, recent shifts suggest increasing odds of a December cut. The macroeconomic data, U.S. economic data, has shown consistent underperformance since the election. Contrasting with earlier strength, the shift aligns with reduced rate cut expectations and growing caution among Fed officials. And the reverse repo trends, the Fed's reverse repo facility has seen significant drawdowns, indicating tightened liquidity amid easing policy concerns. And the Fed outlook, the Fed appears poised for cautious decision-making, balanced inflation control with labor market resilience. While a pause in rate cuts is possible, flexibility remains key as policymakers navigate mixed signals in a dynamic economic landscape. Investors now look to December's meeting for further clarity. All right, so that is all the news for today. And let me stop. If you go down here to the bottom of this article, which is linked in the show notes, you can read the entire FOMC minutes in its entirety. It is 17 pages of excitement. So, or you could go to the, you could just go type in Federal Reserve meeting minutes, and it'll take you probably to take you directly to the page that it's on. So, all right. Well, that's everything that I had to cover for today. So if any of you out there need to get your financial crap together, where do you go? DSAFinancialGroup.com. That's where all your financial planning needs can be addressed. Get on track for retirement or just being uberly wealthy or whatever you want to do. I'm here to help. All right. Well, that's everything that I had to cover for tonight or for today. I hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.